released its financial stability report. The report highlights that gross non-performing assets may rise from 2.3% in March 2025 to 2.5%. In fact, under adverse scenarios, GNPA could also reach somewhere between 5.3 to 5.6%. My colleague Anjali is here with the details and the key takeaways from this report. Anjali.
The Reserve Bank of India came out with its biannual financial stability report for June 2025, in which the Reserve Bank of India governor said that near-term global financial stability risks have increased and that growth momentum currently in India is buoyed by domestic drivers, macroeconomic fundamentals and the prudent policies. He also noted that external spillovers and weather-related events could pose downside risks to growth going forward. Now, in its financial stability report, the RBI did conduct some stress tests, and in which they found that the gross non-performing asset, which is currently as of March 2025 at 2.3% levels, in the baseline scenario these could increase to 2.5% level. In adverse scenario 1, that could be 5.6%, and in adverse scenario 2, it could be 5.3%. Meanwhile, the CRAR currently at 17.2% in a baseline scenario could dip to 17%. In adverse scenario 1 could drop down to 14.2%, and in adverse scenario 2, it could be 14.6%. Additionally, RBI made some other comments saying that banks' non-performing loans ratio is currently at a multi-decadal low, and that economy and financial system are relatively well positioned to bear with the tariff-induced shocks, again referring to the geopolitical risks that are coming up. India's growth, as the governor also said, is largely dependent on domestic demand, and they also noted that the outlook for food inflation remains favorable as the prices have started to soften and the crop production is at record levels.